next question. What is the internal rate of return of the project? Now you are given 4 answers, out of which we need to select the correct answer. Now, what is the internal rate of return? So basically, the internal rate of return is the discount rate that makes the net present value of a project zero. So in other words, we can say the internal rate of return is the rate at which the project breaks even. Okay, so in order to calculate the IRR or the internal rate of return manually, we have to use a formula. So what is the formula that we need to use? The formula will be, I will show you. This is the formula. Okay, so to calculate IRR, what we need to do is we need to have 2 net present values, okay, at 2 discount rates. So one being a higher net present value and the other being a lower or negative net present value. Then by using this formula, so we can calculate the IRR. Okay, so if you go through this formula, it says IRR equals to RA plus net present value at A divided by net present value at A minus net present value at B. Then you have to multiply RB minus RA. So this is the formula. Okay. So this formula we need to use. We need to apply to calculate the IRR. So what does RA means? RA means the lower discount rate. It is the lower discount rate. Then RB, what does it mean? RB means higher discount rate. Higher discount rate. Then NPV at A, which means NA means net present value at RA, which means RA means the lower discount rate. NPV at RB will be the net present value, the lower net present value. Okay, so this is the formula we need to apply to calculate the IRR. Basically, we should have 2 net present values. So one being higher net present value and the other being lower net present value. Now, since we have already calculated the net present value at 12%, our discount rate is given as 12%. As you can see, our cost of capital is 12%. So this 12% at 12% net present value we already calculated. So that was we discussed under question number, I think 2. It was the question number 2. There we calculated what is the discounted net present value, which was the question number 4. We calculated. So what we did, we arrived at net present value of how much? 195,870. So this is at 12% cost of capital. So we took the cash flows. These are the cash flows we took. These are the discounting factors at 12%, and these are the present values of present value at 12%. We arrived at 195,870. Now we already have one net present value, which is at 12%. Now what we have to do is we have to select another discounting factor that will give us a lower or negative net present value. Now, when you take the higher discounting rate As a rule of thumb, I would say just to keep a gap of 5 to 10% more than the lower discounting factor. Since our discounting factor is 12%, so what we can do is I would rather take a discounting factor of either 20 or 22%. Okay, so in this scenario, in this question, so what I would like to take is 22%. So let's take 22% discounting factor to uh, discount the cash flow. Okay, now first of all, what we will do, we will take the cash flows uh, from year 0 onwards. Okay, so year 0 we have 780,000 cash outflow. That this was our investment, initial investment on the project was 780,000. Year 1 there's a cash flow of 150,000. Year 2 cash flow will be 220,000. Year 3 340,000. Year 4 400,000. Year 5 again 300,000. Okay, now let's take the discounting factor. As I told you, I will take a higher discounting factor rate of 22%. In year 0 there is it's a current value, therefore there is no the discounting factor will be 1. Then this is the present value. Present value also will be 780,000, because 780 times 1 will be 780. Now let's take the discounting factors from the discounting factor table that will be provided in your exam. Okay, so that will be point 0.820. First of all, we'll take down from the table 0.820. Year 2 will be 0.672, 0.672, then 0.551, 0.551, then 451 and 370, 0.451, 0.370. Now we'll take the values here. How do you take the present value? 150,000 times 820 will be how much? So that will be 122,951. 122,951. Then 222,000 times 672 will be 147,810. 147,810. Then 340 times 551, that will give you 187,240. 187,240. Then the other one is 180,560. 180,560. 180,560. And the last one will be 111,000. 111,000. So our net present value, when you take the total, NPV will be how much? That will be 30,440 minus 30,440. It will be a minus figure. Okay, so that is a net present value at 22%. Now we have two net present values. Okay, so we know at 12% and 22%. So at 12%, it was 195 371. Let me get the correct figure. 195 870. 195 870 is a positive value. 22%, it's a negative net present value. So therefore, the uh, NPV should lie between. Therefore, the NPV should be in between 12% and 22%, in between these two rates. Okay, so let's apply the formula. Let's apply the formula. Okay, so what is RA? That is the lower discount rate, so which is 12%. What is RB? Which is the higher discount rate. Okay, then NPV at A means the NPV at the lower discount rate, which is 195,870, and NPV at B is 30,000, I think 440, 30,440. This is a negative NPV. Now let's apply the formula. So IRR is equal to RA means 12%, okay, plus we have to take NPV at A. NPV at A is 195,870. Then NPV at A again, which is 195,870, minus NPV at B. B means 30,000 minus, within bracket, 30,440 times RB means the higher discount rate minus the lower discount rate. Okay, then we have 12% plus, when you simplify this, 195,870. When you simplify this, 195 minus, it will become minus times minus. It's a mathematics, your mathematics. It will become plus. So therefore, we need to add these two figures. So that will be how much? 195,870. 195,870 plus 30,440. So that will be 226,310. Okay, 226,310. That has to be multiplied by the difference between 22% and 12%, which is 10%. Okay, so when you simplify, that will give you 195,870 divided by 226,310 times 10, 8.6. Okay, so when you simplify this, this will give you 8.6. So therefore, the IRR should be 20.6. Okay, it should be around 20 point something. Okay, 20.6 according to this calculation. So let's go through the answers. You are given 4 answers, which is 18.33, 15.25, 24.23, and 20.4. So the closest answer is 20.4. So therefore, the answer is D. Okay, so answer should be D. So the answer should be D because uh, we are getting 20.6, okay, which is close to 20.4. Okay, so therefore the correct answer is part D. So this is the answer for the final question, which is the internal rate of return.